to another weekly market breakdown. And in today's video, I'll be taking a look at the dollar index, the NASDAQ, the Dow Jones, S&P 500, as well as gold and Euro USD as well. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash that thumbs up for the YouTube algorithm. And as always, let's jump straight into it, my good friends. Now, before we get started, I just want to say a very special thank you to the members of the channel. Starting here from 𝐥𝐤𝐤𝐤 with his monthly renewal there as well, including everyone else that is constantly also involved in the program as well. I really appreciate the support and hope you guys are still enjoying the services over there as well. Now, we are going to start with the dollar index, and we obviously need to understand the fundamental data behind it and see what kind of news events we have coming through this week as well. And if you followed the last video that I did, you would have probably had 100% success rate because everything went 100% as anticipated. As always, you can see the dollar index increased, the NASDAQ started to dump as I said. The Dow Jones also went straight down exactly as I said. The S&P 500 also dipped as I said. Take profit at hit there. Euro USD also dropped like I said. And gold also now starting that move to the downside. Now it's time for an update. If you did not get into the first move, hopefully you would be able to get in there as well. If you got in the first move, please let me know down in the comments section below there as well. Now let's remove the previous analysis and let's jump into the new one for this week there as well. Now we obviously know that last week, especially for the for the dollar index in particular, we had this was on the 21st. We had the federal funds rate. We had the let me just refilter this very quickly just because I don't like to get confused. So if we go and have a look at what we had last week, we had obviously the funds rate. We had the PMI. Powell came through, speaks. This week he's speaking again. Consumer confidence. Powell will speak again. Powell seems to be speaking a lot this week. We got the core PCE index there as well. Now, for those of you that are not familiar with that, it's basically as what Powell does when he comes out, as head of the central bank, which controls short-term interest rates. He has more influence over the nation's currency value than any other person. Traders scrutinize his public engagement as they often use to drop subtle clues regarding future monetary policies. Basically, what Powell comes, or what he does is he comes out. It's when you are similar to being a manager or whatever you want to be, when you oversee people and you need to report on whatever's going on there, and people listen to what you say and see if whatever you're saying is going to, have a further negative impact on what, on your people or your economy. And they use that as a confirmation what we can expect in the future. But before we get there, it's clear that the markets are crazy. GBP, GBP, for instance, slid on Friday. I think it was on Friday. Things were just going crazy for GBP there as well. And if you are not familiar with the GBP index, it's called the BXY. And if you go and take a look at the BXY, which is the British index, let me just remove that. You can see here how this market had taken this massive dip over here, and we can see that the pound at the moment is currently in bearish territory, as you can see over here. Now, that's basically because we first saw the pound had an interest rate hike of half a basis point. And then on Friday, the news came through that, they announced that they're going to cut taxes on the pound, and investors don't like that. So boom, the pound slid all the way to 108.50 at the moment. But we're not here to speak about the pound. We're here to focus on the dollar index. Now, main article from CNBC reads, from the Fed to Europe's currency crisis. Here's what's behind the sell-off. Now we know that stocks and bonds sold off around the world Friday because the Federal Reserve and other central banks moved to raise interest rate and battle inflation. Now there is no question about that because we know inflation is at an all-time high for almost every country out there due to the pandemic, where interest rates were lowered to accommodate people at that time. And now it's payback time. It also says here markets have been adjusting to the idea of higher interest rates at the same time. And there's also been warnings of recession or rising. We know that the pound, especially England is specifically, the inflation is sky high and there is high risks of inflation. We know US has also got a very high risk of inflation at the moment there as well. Last year, by basically endorsing the idea of recession, Powell set off the emotions Powell set off the emotional phase of bear market, said one strategist. I could have said that as well. Said your stocks fell sharply, bond yields rose, and the dollar strengthened Friday as investors heeded the Federal Reserve signal to battle inflation. Now, there is no question that the Feds are going to get quite aggressive to tackle inflation, and people are scared, as you should have known by now. Now, we're going to start here with the dollar index, right? Now, the dollar index currently is heavily overextended. Now, we can see how the market is now currently trading exactly at that previous level of support over here that is now being tested as resistance. Now, we can expect a slight pullback before the continuation to the upside there as well. And that is basically what I'm anticipating the market to do this week based on the data that I received also. Now, if you look at the weekly time frame, what do we have? Now, here from a weekly perspective, we have this massive impulse that the market had printed. And you can see how the market printed this level of resistance, broken above that, tested as support, printed new resistance. Now, we can definitely expect the market to pull back before that further continuation to the upside there as well. Also, if you take your Fibonacci from the low to the high of this massive impulse, where we have a 61.8, which is known as a golden ratio in the market, that we could potentially expect the market to pull back to. Got this massive wick over here. That's also a price that the market had visited once in the past on the daily time frame. What do we have? Now, from a daily perspective, we can clearly see that this is a very strong level of resistance that the market had printed. Now, once resistance gets broken, it becomes support. Now, going into next week, I do expect the market to pull back first before continuing higher, and then go and take out that previous monthly resistance that the market had formed over here. This was formed in 2002 of January, and then we can expect this market to continue this bullish this bullish momentum and go test that previous level of resistance, because that's the next stop basically for the dollar index. Now, this is what I see happening going into next week, my good friends. So please make sure that you do follow that through as well. Also, it's important that you follow a set of rules when it comes to trading. If you don't have a set of rules, you're more than happy to go check out the website, where because I do provide mentorship, and I do also provide a signal service if you are looking for one as well. I'll leave a link in the description below for that also. Now, next up, we do have the NASDAQ 100. Now, the NASDAQ had finally reached the target that I've been speaking about many times before. Now, I've spoken about this market at that level, and like I said, we can definitely expect the market to continue lower. Now, the market had now reached the point of support. Now, once the market reaches the level of support, we can definitely expect a pullback. Now, the main target, if you take your Fibonacci from the high to the low, we can see where the 61.8 tested, rejected quite aggressively. Then if you take your Fibonacci lower, there is still an opportunity for the market to continue lower than compared to what it is now on the weekly time frame. What do we see? Now, from a weekly perspective, we can see over here, and I just need to check this first. Yes, we do have the market currently also testing this level over here, but I don't want to go too deep into the past. So we can see the market is currently testing previous level of support over here, and this is also known as an equal low. Now, what we can see over here as well is the market had also printed the strong level of support. Now, once support gets broken, it becomes resistance. Now, we can see how the market broken below that support. So we can definitely expect a pullback going into next week before that continuation to the downside for the market to go and test the minus 27 on the weekly time frame there as well. Yeah, on the daily time frame, what do we see? Now, from a daily perspective, it's clear the market had printed a massive impulse. After an impulse, you expect a correction. Now, if you take your Fibonacci from the high to the low, you can see we've got the confluence of the 61.8 lining up perfectly with this previous level of support over here that it's now turned resistance. Now, it's very important that next week we can expect the market to continue higher, go to hit that previous level of support that is now turned resistance, and from there we're going to quite again monitor our price action from the and then I'll give you guys another update on that there as well. Now, that is how we are going to approach the situation on the NASDAQ. Next up, we do have the US 30, and I'm not going to go through the entire breakdown on this, but we can see that the US 30 had also now reached a point of, that the market also now reached a point of support. But if we go back on the daily time frame, we can see that the support for the Dow Jones had been broken from a daily perspective. Now, this is normally what you see when the market comes to a previous low. The market normally hits below the level, which is a lower low, because this is where buyers are in and their sells are all here. This could be a liquidity grab that the market had completed. Now, that's basically what I see over here. So now, again, going into next week, I do expect the market to continue slightly higher. Also, if you take the Fibonacci from the low to the high, the confluence that we got here is 78.6, which is the last Fibonacci level. However, I do expect the market to come and hit this level over here first before we expect the market to continue lower. Now, the best way to approach this, because we have broken this structural level over here. Now, we can't just approach this the same way we are going to approach the NASDAQ. Now, we have a level of support over here. Now, we need to wait for the market to break above this level of support. Support over there that is now acting as resistance here. We need to wait for the market to break above this level of resistance. It would then return support, and then from there we can then start looking for buying opportunities on the US 30 or the Dow Jones there as well. We can see here on the S&P 500 similar price action to the NASDAQ. Now we can use the same approach here as we have on the NASDAQ, so we can definitely expect the market to continue higher before that continuation to the downside there as well. So that is how we are going to approach the situation there. Next up, we've got the Euro USD here. Starting on the monthly time frame, we can see that Euro USD has been quite bearish. The market is now currently testing this previous level of support that it had created way back in 2002 there as well. Now, when a level of support gets tested, we normally expect the market to reject that level there as well. Also, we can see the market had finally broken below the strong level of support. Now, once supports get broken, it becomes resistance, but we can't expect that pullback to take place. And you can see how we are quite trading in bearish territory over here, so we can definitely expect a pullback before the continuation to the downside there as well. Now, the best way to approach this, obviously, is we need to wait for the market to pull back to a previous level of structure that it had created. Again, going into next week, I definitely expect the market to pull back to at least to this level. We have this massive impulse. So after that impulse, we had a correction, and that will give us the confluence of the 50% Fibonacci. And then from there, once the market get to that level, I'll then give you guys an update on there as well. Boom. So that's going to be step number 1. I don't want to confuse you guys with step number 1 and step number 2. Next up, we've got gold. Now, with gold is now finally broken below this level, and I said we could still get a pullback. But with gold, we're going to use the same approach. Gold had just broken out of this consolidation phase. Now, going into next week, I expect gold to pull back slightly. Again, from there, we will then monitor the price action from that level, and then we definitely are going to start looking for either selling opportunities or continuation in buying opportunities for gold there as well. Now, that's all from my side. Thank you for your time, and as always, cheers for years.